Everyone is talking about silver demand from solar, like it is either a total non-issue because manufacturers will thrift their way out of it, or a guaranteed one-way ticket to instant triple-digit prices. Almost nobody is talking about the awkward middle, and that is a problem. Because right now, as we speak, the solar industry has a silver problem. And if you do not understand what kind of problem it is, you are going to misread both the metal and the stocks tied to it. So let me tell you what the crowd is missing and why it matters. I am recording this right now from Los Angeles, and I want you to comment what day and date you are watching from, because I always love seeing how far these videos travel, and I want the timeline to be crystal clear because this story moves fast. And real quick, if you value this kind of straight talk, do me a favor, subscribe and comment, Fin Talk OG, so the algorithm knows you want more of this. Now here is the claim making the rounds. Solar is using less silver per panel, therefore the silver demand story is overblown, or the opposite version. Solar is growing so fast that silver must inevitably go vertical right now. And on the surface, both of those sound kind of neat. One is clean and bearish. One is clean and wildly bullish. But when you slow it down piece by piece, you realize one side is confusing efficiency with relief, and the other side is confusing pressure with instant payoff. That is clean. It is also incomplete. So in this video, we are going to separate signal from noise, because by the time we are done, you are going to walk away calmer, sharper, and more in control of how you think about silver, solar, and the stocks hanging off this story. So let us start with the basic mechanism. Silver in solar is not there because somebody thought it looked classy. It is there because silver is one of those materials with physical properties that are difficult to replace cleanly at scale. It conducts extremely well. It performs in demanding electrical environments. It matters in the guts of the system. The clean way to think about it is this. Silver in a lot of industrial applications is like sandpaper in a workshop. You use it up because it does the job, and once it is embedded in the process, it is not sitting there like a gold coin waiting to be admired. It gets consumed, not always destroyed in the chemical sense forever, but functionally locked into industrial use for long stretches. That matters because a lot of silver demand is not ornamental demand. It is infrastructure demand. Data centers, solar panels, EV systems, grid upgrades, electronics, catalysts. This is not some niche hobby. This is the wiring of modern life. Recent industry survey data shows industrial silver demand near record levels, with the solar side being one of the key drivers over the last several years. Now, here is where the mainstream talking point gets lazy. People hear that manufacturers are using less silver per panel, and they think problem solved. No. That is like looking at a gas pedal and a speedometer and saying because the car is getting more fuel efficient, the road trip cannot get more expensive. But if the trip keeps getting longer, total fuel use can still rise. Same story here. Thrifting lowers the silver intensity per unit. But if deployment volumes keep expanding aggressively, total ounces can still stay high or even climb. Same asset, different interpretation. Efficiency is not the same thing as demand destruction. Now, here is the skeptical alternative. Could technology reduce silver load enough over time to cap this story? Sure, that is plausible. Manufacturers are not asleep. They are working constantly to lower costs, redesign cell architecture, and stretch every input. And I am going to say something that might annoy both sides. The silver bull who says solar demand can only go up forever in a straight line is being lazy. And the silver bear who says thrifting eliminates the problem is also being lazy. The real issue is not whether engineers try to use less silver. Of course they do. And the real issue is whether they can reduce silver dependence faster than the build-out itself is expanding. That is the race. And what current data indicates is that industrial demand has remained very strong despite all that engineering effort. That should tell you something. Now let us talk about supply response because this is where the story gets even more interesting. Here is what nobody wants to say. Even if the market sent a huge price signal tomorrow morning, silver supply does not just snap into place. You cannot speed run a mine. You cannot speed run a refinery. And it is like steering a cargo ship. You do not pivot on a dime. Recent industry reporting suggests mine supply has improved a little. But the medium-term outlook is still awkward because some operations are maturing and because silver is very often not mined as the main dish. It is the garnish coming out of lead zinc, copper, and gold operations. That means if solar wants more silver, the silver market cannot always answer directly by saying, fine, we will just open a lot more pure silver mines tomorrow. A big chunk of supply is hostage to the economics of entirely different metals. That is the awkward cousin part again. Silver demand can surge on its own, but silver supply often has to wait for somebody else's mine plan to make sense. That byproduct issue is one of the most misunderstood parts of the whole sector. Let me be blunt. When people say there is plenty of silver production capacity if prices rise, what they often mean is they have not looked carefully at where silver actually comes from. If a copper mine or lead zinc mine is slowing down, silver output can fall even if silver itself looks attractive. If the main metal is weak, the silver passenger gets dragged with it. So when solar demand adds pressure to the system, that pressure is not hitting a clean, flexible, silver-only supply chain. It is hitting plumbing. And plumbing matters. If the pipe is old, complicated, and attached to 5 other pipes, turning one valve does not solve the problem. Here's a question for you. Do you think the bigger long-term force on silver is investment demand or industrial demand? Drop that in the comments because I read them. And stay with me on this because it matters. Because the answer changes how you think about price action. And if silver is increasingly being valued as industrial infrastructure rather than just crisis insurance, then the market can eventually start assigning it a different kind of premium. Not immediately, not cleanly, but over time. Now, before we go into the practical side, we need to address the stock angle. Because a lot of people hear a strong silver demand story and instantly jump to silver miners, solar manufacturers, and anything with the word metal in the ticker. Slow down. A booming input story can be good for miners and bad for manufacturers at the same time. This is the lemonade stand problem. If your input costs go up, but you cannot fully pass them through, margins get sanded down. For a solar manufacturer, rising silver stress can be a cost headache. For a well-run silver producer, it can be a revenue tailwind. See, for a bad miner with dilution, weak assets, and messy jurisdiction risk, It can still be a bad stock even if the metal thesis is right. Do not just chase this thing, chase the mechanism instead. Ask who benefits, who absorbs the pain, and who has pricing power. That is plausible. Here is how it can fail. If the broader economy weakens enough, solar deployment expectations can cool. Government policy can change around the edges. Manufacturers can re rate lower. Commodity funds can dump cyclicals. And silver, because it wears both an industrial hat and a monetary hat, can get caught in the crossfire. A correlation is not a contract. Clean energy optimism does not guarantee clean chart behavior. So, what does this actually mean for you? It means if you are buying the solar silver story through equities, you have to separate producers from users. A rising silver price is not universally bullish across the chain. Now, here is a simple action plan. No drama. Step 1. Decide whether you are expressing this view through physical metal, paper exposure, mining stocks, royalty names, or companies that consume silver. That choice matters more than the headline. If you are a stacker, your rule is simple. You are not trying to forecast the exact quarter when solar creates the next squeeze narrative. You are building exposure to a hard asset with industrial relevance and monetary optionality. Keep it boring. Keep it consistent. If you are a trader, your rule is different. Watch whether industrial demand headlines actually change price behavior or just create social media noise. If the market shrugs off very strong industrial data, that tells you timing is still not there. If the market starts reacting sharply to supply bottlenecks and staying bid, that is a different environment. If you are building long term through stocks, here is your specific rule. Separate silver producers, diversified miners, royalty companies, and industrial users. Write it down. Decide this first, then that. First ask who owns the resource, then ask who controls costs, then ask who can survive a messy middle before the thesis pays. Step 2. Build a watch list around the real tells. If you want to understand whether the solar silver problem is intensifying, you do not just watch one headline metric. You watch industrial demand commentary from recent surveys. You watch mine supply response or lack of response. And you watch whether visible inventories are trending tighter while fabrication demand stays firm. Step 3. Do not make the common mistake of believing every efficiency headline is bearish. In many industries, efficiency is what happens right before scale overwhelms the savings. Step 4. Keep it sane. This asset does not need leverage to be exciting. It will provide the excitement for free. Now, here are my questions for you. Do you think solar is the most important silver demand driver? Or do you think the market is still underestimating monetary and investment demand? And if you were expressing this theme today, would you rather own physical silver, a silver producer, or a royalty company? Drop your answer below and remember to include what day and date you are watching from. Yeah, and if you got value out of this, subscribe and comment FinTalk OG. So I know you want to follow up on silver miners, solar manufacturers, or the demand drivers nobody on financial television wants to explain properly. And if this helped you, share it with someone who keeps repeating that thrifting means silver no longer matters. All right, keep your head clear, and I will talk to you soon. And just so we are crystal clear, this is educational content. It is my take based on publicly discussed information and my own reasoning, and it is not personal financial advice. I am not your advisor. I do not know your goals or your risk tolerance, and I could be wrong. Do your own homework. Consider your situation. And if you need personal advice, get it from a qualified professional who knows your situation.